Welcome, everyone, to episode 66 of Swan Signal Live. I've got two fire guests here. Greg Foss, who has been bringing the fire on Twitter lately. Really excited to get into it with him today. And a perennial favorite on this show, Andy Edstrom, will be joining him. Before we dive in, I just want to talk a little bit about Swan Bitcoin, obviously the producer and sponsor, if you want to say that, of this show. I am Brady Swenson, head of education at Swan, and we are absolutely committed to education. We view our marketing as education. The more that somebody knows about Bitcoin, the more likely they are to buy Bitcoin. But more importantly, the more they know, the more likely they are to understand that this is a long-term thing. This is a 10-year, 20-year, 30-year horizon going on into hundreds of years eventually. But as investors, as buyers of the best money that's ever existed in human history, we have to understand that this is a thing that's going to go on for decades. We're only 12 years in now. And we have to think at least 10 years into the future. That's what we teach all of our customers and clients at Swan Bitcoin, so they can weather the volatility, so they can learn what's really going on here and commit to this as a long-term thing and educate themselves. And we know that educating yourself about Bitcoin just leads to all kinds of other rabbit holes out there, economics and personal health even. Like we all know that there's so much to learn, and Bitcoin is really a jumping off point for that kind of an education. I've learned so much about the world that, even as a 35-year-old person, when I discovered Bitcoin, I had no idea about. Didn't know what money was. Now I know. And it's amazing. It's really changed my life. So send your friends and family to Swan Bitcoin. We are there to help them in a very hands-on way. Our client services team is incredible. They'll answer any question that you have about Bitcoin. We're all Bitcoiners. We've all been in this space for a long time. We're all very mission-driven about this asset, about this money. And we are doing our best to help all of our clients understand what's going on. We also have private client services, a team that has really grown as of late, serving high net worth individuals and corporations looking to buy significant amounts of Bitcoin. You get one-on-one access to one of our Swan private client services representatives. And they'll walk you through the whole process and be there to answer questions along the way. You get other perks too, like Swan Private Insight, an amazing newsletter that we've been putting together, 40, 50 pages of content that I think is some of the best in the business, amongst other benefits as well. Swan Livera. Stefan Livera has recently joined the private client services team as the director of international. And so really excited to have him on board. And that means, yes, of course, you can buy Bitcoin through Swan internationally using wire transfers. So go to swanbitcoin.com/private to check that out. We have a lot of awesome announcements coming down the pike in the next few months. So keep an eye on the show here. Keep an eye on our Twitter feed at Swan Bitcoin. Really excited to announce some new services, some new features, and some new educational products that will be launching in the coming months. So lots going on here, and ready to dive into this one today with Andy and Greg. What's going on, guys?
Brady, great to be here. Thanks for having me.
Yeah, great to see you. Great to see you, Brady. Great to see you, Greg. Long time no see. Actually, it's been about an hour because we just came off recording with Peter McCormick for the What Bitcoin Did podcast.
Yes,
which is a slightly funny story that if you'll humor me, I'll tell briefly. Which is last week, Peter decided smartly, I want to do an episode on Evergrande. So of course he has one of the best financial analysts, macro analysts in the business on speed dial. That's Lynn Alden. And Lynn, I think, had a conflict. So she said, hey, Peter, why don't you try Andy? So I got a DM from Pete on the weekend saying, hey, you've been following this thing. Yeah, I've been following it. Oh, how about I said to him, how about we tag team it with Greg Foss? So he looped in Foss. Ben Prentice got it all set up. We were set up to record this morning. And then yesterday I got a DM from Brady saying, hey, how about we do a Swan Signal on Evergrande with you and Greg Foss? And I was like, great. But I already promised to do we already promised to do it with Pete. And considering that, his is recorded and won't come out till afterward, I don't want to steal his thunder. But of course, Pete, being the great guy that he is, said no problem, go for it. So out of respect for him, and since he came to us first, I think we'll probably keep it brief on the Evergrande stuff today, so we don't steal any of the thunder from that episode, which I think is supposed to drop on Sunday. But yeah, that's the backstory.
And without I'm between that podcast and this podcast, Andy, I was on with Jay Gould.
Wow.
And so we talked. So I'm on to my third podcast of the day. So when all these come out, I don't want to be accused of wearing the same clothes on 3 different podcasts on 3 different days. We need to make sure I'm wearing this ball cap, and I'm wearing this. Actually, this is I'm not sure if you guys know who Sat Street is, but that's a Canadian OTC Bitcoin exchange run by a young kid, Mike Nazer, who's a friend of Jeff Booth's and mine. And I wear this T-shirt, but not 3 days in a row. So let's be certain that we all understand that Foss does change his clothes on a regular basis, if that's okay.
Well, out of respect to you, Andy, as a friend, I will resist my instinct to scoop his ass.
Let's talk a bit about it, guys. I mean, it's at the end of the day, it's on the. We won't go into as much depth as Peter and Andy and I think we complemented each other quite well. And one of the reasons is that we both worked on traditional finance desks, Wall Street. We both worked on Wall Street, Bay Street in Canada, but at the end of the day, we talked a very similar language, and I think it was complementary. So I'd be willing to do it. I don't think we're stealing any of Peter's thunder. And I did mention Evergrande on Jay Gould's thing, and let's hit a couple of key points.
Yeah, I definitely wanted to get an overview of it because I think it'll fit into the narrative that I want to kind of draw through this episode. So, and it's the news of the day. We would be remiss to not talk about it at all. So Andy, why don't you start with kind of giving us just a high level overview? We'll try to keep this to about 5 minutes, and then we'll transition into some macro stuff that's related, but broader.
Okay. So Brady, I might deflect a little, but I'll tell you, I'll put in a personal anecdote, which is relevant, and we'll take it from there. So I had a client, this was 7 or 8 years ago, great people, really nice. And they took a flight down to Mexico, from LA area, and they were going to vacation with their friends who had a vacation home in Mexico. I think it might've been in Baja. And they came back, they had a great time, and they said, "Hey, Andy, we want to get a vacation home in Mexico." Okay, fine. Great. Can we afford it? Yeah, you can probably afford it. Do you want to, what do you want to get? What's it look like? Have you seen the place? Tell me about the place you're thinking about. And they said, "Oh, it doesn't exist yet. We're interested in investing some of our money in a construction project, right? In a newly built community in Mexico." And they were going to put in, I think it was something like $250 or $300,000. And it was mostly going to be funded up front on the promise that the project would be constructed, within a couple years. And I counseled them that this might not be a great idea. One of the things we know about assets is most of the assets in the world are claims against other things that may or may not exist. In this case, if you're funding basically a construction project, you're taking a way higher level of risk than if you're buying a house that already exists outright. By the way, in a foreign jurisdiction, let's add. And so I advised them against it. I'm sad to say that they went ahead with it anyway, and they got scammed. The house never got built. They were out whatever it was, a couple $100,000. The deposit was a sizable percentage of the total purchase price. And it was basically a total loss for them. And the reason I'm telling this story, not just as a warning and a parable, most Bitcoiners understand this already because they understand that they own this pristine collateral asset, provided that they're holding their own private keys and not leaving them on the exchange. But the point is, this is what Evergrande does. Evergrande takes money from citizens in China, primarily, over 1 million of them currently, it is believed, have money on deposit with Evergrande. And they take the money, then they build the homes. And then when the homes are finished and constructed, then the depositors, get the asset that they paid for. And it's probably obvious what one of the problems with this setup is, but maybe I'll leave it there, in terms of facts and circumstances with respect to Evergrande, plus that personal anecdote. And if Greg wants to chime in, he's welcome to.
Yeah. So the total debt of Evergrande is substantial, but it's all disclosed on balance sheet as a liabilities to the citizens that have invested in pre-funding these houses. I believe there's around $200 billion US dollars. And then there's another, call it 100 billion of interest-bearing debt, bank debt, and publicly traded loans. So at the end of the day, this is a meaningful distressed situation. It's in comparison, Lehman Brothers was 600 billion. I had that number ready to go with Peter McCormick, and Andy jumped in with that number, which I love. But I had another number too. The Greek debt restructuring in 2012 was 200 billion. So think about the 200 billion to the families in China. That's going to be a big hickey for them. The key thing, though, is in the case of Lehman, it wasn't just their on-balance sheet liabilities that were concerning. It was all the off-balance sheet credit default swaps, all the derivatives, everything that's off-balance sheet at a financial institution. That's where the problems were. It's the cross defaults. It's, think of the fact that AIG, if it was rumored if AIG was going to fail, Goldman Sachs was going to fail as well, because Goldman had purchased so much insurance from AIG to offset their own risks and some of their client risks as well. So half of those trades wouldn't have netted. Goldman would have been exposed. Those are off-balance sheet liabilities. So this is a meaningful distress situation, but it's not large like Lehman or even the Greek financial restructuring. So keep that in mind. The flip side is, though, the bonds are trading at 25 cents on the dollar. What people need to understand is when bonds trade at 25 cents on the dollar, it's no longer a bond. It is a restructuring candidate. And anybody putting new money into that bond at 25 cents on the dollar is not doing it because they think they're going to get 100 cents on the dollar in return. They are doing it because they anticipate to get mid 40s, let's say, and you can essentially make a nice return on your capital. That capital is no longer bond capital, though. Think of it as restructuring, and that typically is an equity. So the bonds now are the equity, and the equity that trades on the exchange in China is not an equity anymore. It's actually a deep out of the money option. And anyone playing in that and putting new money into that security is an idiot. But that's what always happens, because people don't understand how capital structure, priority of claims work, and they don't understand how to buy bonds at the right price, not on a yield basis, but on a capital invested basis. So one of the things that happens in China that's different is, well, there's two things. Firstly, their high yield market is not nearly developed. It's very dominated by property developers. So the whole high yield market, of which Evergrande accounts for more than 15%, is skewed to property developers, and they're getting crushed. The yield on the Chinese high yield market in US dollar terms is over 14%. Now, that yield doesn't actually even make sense, because the yield on the Evergrande portion of bonds that trade at 25 cents on the dollar don't make sense either. There's like thousands of basis points of yield. It's only math, but it makes no sense. Again, the bonds at 25 cents on the dollar are not a yield instrument anymore. They are a restructuring instrument. The second thing is that the distressed buyers in China do not exist like the well-developed distressed buyers in North America, primarily the United States. Oaktree Capital Management, Howard Marks in in California. He's brilliant at creating value out of distressed securities, but you need to be really at home in the courts as well as in your ability to identify financial opportunity. So Howard Marks, those types of investors don't exist in China. So the bonds probably have fallen farther than they should have. That being said, they're trading at 25 cents on the dollar. You guys, a yield on that bond, again, makes no sense. So don't look to the high yield market yield as a true indication of what the risk is. Look down the spectrum to investment grade debt. These are higher quality companies. The spreads on investment grade in China are actually hanging in very well, which gives me comfort that the contagion in the credit markets in China so far is just constrained to the names that trade in the high yield market, and they're mostly property developers. There could be some leakage into banks that have exposure to property. You could look at credit default swap spreads and subordinated debt spreads on HSBC, for example, or Standard Chartered as potential candidates where leakage or risk, increased pricing for risk would incur in those names. But it's nowhere near the severity of the great financial crisis yet. You never say never. Jeff Booth, famous saying, you never know which snowflake causes the avalanche. This is not a good situation, but by the same token, it's not nearly the contagious event, in my opinion. Andy, go ahead and see if you want to add.
No, I think Greg, you pretty much covered the bases there. I agree with everything that you said. It is worth reminding ourselves that the legal system in China ain't the same as it is here in the West. Greg mentioned that there isn't a large distressed investing industry in China. I know that's true. I actually worked for a distressed fund earlier in my career. Saw, some of the games at the table that get played. But basically, it's a chess game in which the legal basis for claims against the asset of the company that's in distress are pretty well established, pretty well trod path. Yes, occasionally you get surprises in the bankruptcy court, with respect to which claimants get paid first and who gets what recoveries. But for the most part, the rules of the game are pretty well established in the US especially, and for the most part in Europe also. Not so China. China is a different kind of a setup where the executive arm of the government, let's say, can step in and rearrange the deck chairs or reshuffle the cards as they see fit. So that's the big question with Evergrande specifically, is like, who's going to get impaired, who isn't. I worry most for the offshore investors, which makes all the sense in the world that China are going to take care of their own first, their own citizens. But yeah, I like Greg. I'm not that worried about contagion here. I do think it segues a little bit into investor protections, investor rights. Brady, I know one of the topics you wanted to cover was what's going on at the SEC these days. What's Gary Gensler up to? And I have some thoughts on that, but I'll hand it back to you for the moment.
Yeah, we're definitely going to get to Gensler, and he's been much more clear over the past couple of weeks on what he intends to do at the SEC with the crypto industry, and so it's very important developments. Question for Greg before we move on to that stuff. So the spreads on 10-year U.S. interest rate swaps over treasuries hit their widest mark in the past 6 months. I think probably in due part to worry about Evergrande, but also just financial troubles in the global economy. And what's the SEC going to say today, which I think is happening right now or in 45 minutes.
The Fed announcement should have come out at 2. And I don't know what they're saying, but I can't imagine that they're bearish. They'll try and calm markets. But I think are you referring to as the credit default swap spread for the US
CDS spreads? Yeah.
CDS. So yeah, that's a 5-year spread, to be clear. And it did widen, but again, you can't, oh my gosh, it widened 25%, but that's the same as a spread going from 8 basis points to 10 basis points. Okay. Like don't, I'll do the math for you really quickly. What is a 2 basis point increase on a 5-year CDS contract? It's worth about 8 cents on a contract. Okay. It's like, it's not life. It's when things on the contract change in dollars and in, when they start charging points up front in a typical distress or in a typical stress scenario. USA is going to be the last fiat to fail. I don't want it to fail. The market is going to price in increased probability of that happening just because it's only math. But you got to look down the spectrum. The ones that are lower, those are the ones that are in big trouble. China. Now that was a meaningful move in 5-year Chinese CDS. And that is more logical because China now trades closer to a BBB type of risk. That's something for the world's second largest economy. Okay. And this is the type of analysis that people are going to start opening their eyes to. Bitcoin is your insurance against that with no counterparty risk. That's the most beautiful thing. Bitcoin has no counterparty risk. You are not buying this insurance from someone who could go under themselves. You're buying this pristine asset that is a thing of beauty. And I like to think of it as insurance against crumbling sovereign credit quality, which in the last 10 years, there's been over 12 countries that have defaulted. In the next 10 years, there's going to be a lot more, in my opinion. Fiat is failing. And once that fiat starts failing in one less important country than the USA, that's where the knock-on effects happen. So yeah, China's more, the CDS has widened to about 40 basis points. 40 basis points is sort of where Portugal trades. Now, Portugal does have the backing of the ECB, but it doesn't matter. China is trading in territory that indicates a BBB credit. That's not a hugely bad credit, but as far as sovereign credit ratings go, it's not that good either.
Andy, do you have any thoughts on Greg there? I did pull up the FOMC statement, and I can read out that but I wanted to give you a chance to respond first.
Yeah, no, I couldn't have framed it better than Greg did. As a reminder, paying 40 basis points for protection is, if you're protecting $100 worth of credit, you're paying 40 cents, right? Less than $1 per year. Mm-hmm. So as Greg pointed out, the difference between 8 basis points and 10 basis points is sort of meaningless. I would argue that, paying, less than 1% to insure against default for a country that is still investment grade, but just barely, as Greg pointed out, that sounds like actually a pretty good trade. I don't have it on myself. I don't have an ISDA contract in place to trade CDS, but I might not.
You do have the contract on. You do have it on Andy, because you own Bitcoin. So that's
there you go.
You're smart. You're smarter by a half. Okay, you're way smarter than Ray Dalio. Okay, Ray is too smart by a half. You're not. You are smart by a half. Okay, and that's what Bitcoin is.
Well, and as you pointed out, Greg, there's no counterparty risk to the Bitcoin CDS contract.
You have no idea how valuable that is to me, from someone who used to purchase credit insurance, at times wondered if the insurance company, meaning like a Goldman Sachs that I purchased it from, oh my goodness, what if Goldman doesn't exist for me to get my insurance money back, And that's, imagine this, and I've said it on other podcasts, Brady, I apologize if I've said it on yours before, but I don't think so. Imagine if you owned protection against the default of Bear Stearns, but you owned it and you had bought it from Lehman Brothers. What a goof. Then you have to go out and buy protection on Lehman Brothers to hedge your bet on Bear Stearns, because, and this is the circularity that causes contagion in the markets. Okay. That's not where we are yet in China. But the fact that it's leaking into the CDS, 5-year CDS on China, you know, markets are pretty smart, okay? And Lehman Brothers at one point traded for 9 basis points, which meant it cost you $9,000 a year to insure $10 million of Lehman debt. That contract, when it matured, was worth over $6 million. Okay, that was a pretty smart trade when you bought protection on Lehman Brothers for 9 basis points running over a 5-year period. Okay, that contract you could have bought, or you could have sold it before Lehman defaulted at a huge mark-to-market gain. But the reality is that's nothing more than, you know, what do you have in Bitcoin? Bitcoin right now is like buying Lehman Brothers credit default protection at 9 basis points, okay? The world hasn't figured this stuff out yet, except we have, okay? And the sovereign nations who issue this paper and say, oh, don't worry, I'll continue to print my way to pay the debt down. I just refer them to Venezuela, please. Just look at the street corner in Venezuela and understand how valuable people thought that paper was eventually. That's a default, guys. When you shovel your currency to the curb, that's a default. I don't want that currency paying me down on my contract that I sign when I lend money to a country in the form of a bond.
The whole dollar is based on a default anyway. The Genesis default in 1971.
Well, yeah,
So,
man. Yeah,
just
you could
slowly
argue that was a implicit default, okay? And there's no question. That being said, again, I need to stress this. I know I'm a Canadian. I love the USA. I do not want the USA to fail. I do not want the USA to fail, even though they are trying their hardest to fail. Okay. I don't want them to because it's not good for my kids, nor for your kids, nor for any kids in the world. Okay. You may have some Bitcoin maxis that say they want this to happen. I'll just say, be careful what you wish for, guys. We don't really want to live in a world of canned food, canned goods and guns. And that maybe some people do. I don't. Okay. So this is why we need a Bitcoin standard for our savings account. And you can do whatever you want in your checking account with this stupid fiat stuff that is guaranteed to debase. But just don't confuse the two. Have a store of value called Bitcoin and have a checking account called fiat that you use for short-term transactions, as opposed to having to barter, you know, trading 2 cows for a goat and stuff like that, or 2 goats for a cow, rather. You know what I mean?
It's a currency, not a money. I know exactly what you mean.
There you go. That's a great way to put it. So I'm borrowing that from the Bitcoin conference in Miami, the savings account for the versus the checking account. That was from Szabo. And yeah, I love that analogy. This is a network transfer, gentlemen. You have a network transfer. You don't turn one network off. It's a process where you run 2 parallel networks. And that's the solution, in my opinion.
Yeah. And that's the beauty of how it's been panning out and how it's been playing out. And you know, you get newer and better services allowing you to save to dollar cost average to stack your sats like Swan, and you accumulate over time. And it's this peaceful, piecemeal transfer of value from the fiat system into the Bitcoin-based system.
Yep.
While meanwhile, the whole ecosystem grows up. We get better on-ramps. We get better security systems. We get the second and the third layer built on top. And it's in some ways, it's a miracle that Bitcoin's had this much time to develop and get tested and get strengthened and you know, become stronger because of its anti-fragility. And I gotta say, I think we're there. I mean, I think Bitcoin is unkillable. And so now it's just about, you know, telling your friends, telling your family, buy this hedge, you know, save in the better money. Yes, as you said, Greg, you know, keep whatever minimal fiat around you need to pay the bills, to pay the rent, to pay the mortgage. I know nobody listening right now has a mortgage because you don't have any money in real estate because it's all in Bitcoin. But yeah, this is the way it's going so far, and it's a thing of beauty.
So just to get this on the record for everyone watching, the news is out of the latest FOMC statement from the Fed. Here's the one sentence that matters, since really everything else is fluff. Since then, the economy has made progress toward these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. So no moderation announced today, which was probably expected.
Yep.
I'm going to go out on a limb. I'll go ahead, Andy.
No, I was just going to say, the markets like it. Equities were up this morning. They're up even more now. And so it's partly, I would say, nothing unexpected. And, investors, I guess, are slightly relieved that there wasn't any bad news. And, the printing machine marches onward.
Gentlemen, they cannot taper. It's over. All right. This is all a bunch of head fake bullshit. The mathematics indicate that it is impossible to taper. They can pretend this and pretend that. At the end of the day, they cannot. It is a mathematical certainty that your fiat will debase on an accelerated basis because they can never attain escape velocity from the debt spiral that they've got themselves into. Okay. Don't overthink it. It's physics, grade 11. Go back to your grade 11 physics, please, people, and understand that it is only math. And Jay Powell's a great guy, but he's a lawyer. Okay. I'm not certain that he doesn't even know what a second derivative is, let alone, what acceleration and convexity is. So it's too bad because you got a lawyer working in a printing office, in a mailroom. That's all good. That's what you get when you pay them peanuts, you get monkeys. All right. So there you go.
That's brilliant. Yeah. Well, let's move over to another U.S. government agency. I guess, the Fed is sort of a, Frankenstein's monster when it comes to the U.S. government, of part private, part publicly regulated. But the SEC, full-on government regulation department or office. So Gary Gensler, who I think most Bitcoiners know at this point, because he does have at least some understanding about Bitcoin and cryptocurrencies. He taught a blockchain course at MIT. He has spoken very highly of Satoshi Nakamoto's invention, saying that Bitcoin is real, and there's a lot of other sort of fake scams going on in the space. So he seems to sort of set Bitcoin aside from the rest of the industry, which is interesting. He has been speaking more specifically about the SEC's plans to regulate the industry, and wanted to get your guys' thoughts. We'll kick it over to Andy. I know you just watched the interview with the Washington Post interview with Gensler that I think happened yesterday or the day before. So it's fresh in your mind. Let's hear what you think.
Yeah. So Gary Gensler is, I would say, every bit a Democratic administration regulator that his predecessor, Jay Clayton, was not, as a Republican administration regulator. Clayton was, for the most part, asleep at the switch when it came to regulating crypto, let's say, or digital assets. And Gensler's come out guns blazing. He's given multiple speeches and interviews now. It kind of started with his speech at the Aspen Institute a month or two ago. And yeah, he did this interview with the Washington Post yesterday. And, I might just even read a couple of quotes from that interview. Quote, "I don't think that technologies long last outside of a social and public policy framework." That's one. Stable coins may have attributes of securities or of banking products. That's another. Let's see here. Bitcoin is a digital, scarce, I'd even say speculative store of value. And, he went on to talk about what he's been hammering on for a while, which is that basically the exchanges should come get registered at the SEC. Okay, what does all this mean? As I see it, all of this is great for Bitcoin. First of all, Bitcoin is one of the few quote unquote digital assets or crypto assets that is unambiguously not a security. By the way, he said in this interview that of the 5,000 or 6,000, those are his numbers, not mine, 5,000 or 6,000 crypto assets out there, the majority appear to be securities. And this shouldn't surprise anyone, right? He's basically said the exchanges that list multiple assets, the chances are extremely low that none of those assets are securities under U.S. law. And so basically and by the way, this is not the only front that he's been acting on. He's been taking action with respect to U.S. investment in Chinese companies that are listed over here in the U.S. There's basically various fronts that the SEC has been more, let's say, more active than it was under the last administration. He talked about the lending products out there. Everybody knows about the state level actions. State of New Jersey was the one that came to mind against BlockFi, against these crypto lending products. And I have to say, I think he's right there too. I got in a discussion on Twitter, I think it was with Jake Chervinsky, and I asked him, I was like, look, these lending companies, BlockFi, Celsius, Ledden, what have you, there's a bunch of them out there. If they don't think they're issuing securities by paying people a rate of return against their crypto collateral, what are they? I mean, they got to be banks, right? And they're not registered as banks. So to me, it's sort of obvious that this narrow window between securities issuer and bank operator that these guys are trying to slide through is just extremely small. I've heard that, maybe they could be considered commercial paper issuers, and therefore they'd be exempt from both the banking regulation and the securities regulation. To me, that seems like a really low probability outcome. That seems really remote, like really a stretch. And so, yeah, I don't know why anyone's surprised about the crackdown coming for the lending platforms or for the exchanges that trade this long tail of crypto assets that clearly were securities when they were issued and probably are still securities. I mean, granted, you've heard speeches and comments out of current and former SEC regulators saying, oh, Ethereum may have been a security when it was issued, but isn't anymore. There's no doubt that Ethereum was a security when it was issued. I mean, that's like really obvious. How they come out with the math or the analysis saying that it's not anymore is beyond me. That's kind of the biggest question mark probably in terms of securities regulation out there, at least in the US at the moment. But yeah, Gensler is going to actually enforce in a way that the prior administration under Clayton did not. And, for Bitcoiners, this just kind of rolls off you like, water rolls off the wing of a duck. I mean, it's
or a swan.
Or a swan. Better said, or a swan. And so to me, it does two things. One is it highlights how pristine and bulletproof Bitcoin is, at least within the regulatory framework. And number two, I'm on the side that more regulation as far as adoption is concerned is good, because there's all these investors that have been sitting on the sidelines saying, hey, there's a bunch of fraud going on in the space, which is true, right? There's a bunch of scams, which is true in the crypto space generally. And if this helps flush some of that activity out over time, that's just going to make it all the more easier for institutions as well as just, your average investors who weren't comfortable with it before just because they saw it as tainted with all this activity. It's going to further open the floodgates and let those guys get involved.
Yeah, Greg, what are your thoughts on Gensler? I mean, lots going on here.
I have nothing to add, Andy. That was absolutely spot on. I will just draw my experience back to believe it or not, 1988, a course I took at Cornell University, taught by a very astute professor on the efficient amount of regulation that every market needs. Okay. Some would argue no market needs any regulation. I'm not quite that free, because I've worked on Wall Street, and I'll tell you that the criminal activity basically navigates itself to the financial markets, because that's really the best place where people can rip the faces off of other people and not get thrown in jail generally. So an efficient amount of regulation is required. It also inspires confidence. And I think this is great. And I will just go and say what Andy said. You know what? I could not add anything to that. So let's just say that having worked at a large institution, managing other people's money, these are the types of things that allow institutional money to embrace an asset, an emerging and evolving asset class with confidence.
Yeah, it's important. I think Gensler and the U.S. in general understands, like the government in general understands, that, you know, you don't want to stifle innovation, that it's served us, embracing innovation in general has served us
and
extremely well.
Expand on that. And this is the neat thing that I want to, and so first of all, hi Tish, I don't know how to respond to your little note there. I'm not technically good on this, but I think that's Tish Martinez, who I met down at Bitcoin conference in Miami, who's giving me a shout out. So hi Tish. And okay, so here's what I know. You know, China is a country that we talked to Evergrande. Okay, so there's risks in China that stem from government over-regulation. There's no question. Did you know that in the 1500s, China had the world's most advanced merchant fleet sailing all over the world, because they had charts that navigational charts using the stars that allowed them to, arrive at a port, without the use of digital satellites and all that stuff, obviously. So this technology that they had in the 1500s was brilliant, but the elites in the communist system thought that these new rich sailing families were going to challenge the elites, and they took the charts and they destroyed them. Okay, so on comes the British sailing team and takes over the world of merchant vessels. And China just said, okay, that's fine. We gave it away. And the funny thing is, Bitcoin mining is actually the same playbook that China is handing the West the ability to mine Bitcoin in our backyard and under an assumed regulatory environment. My God, if I could inspire the USA and Gensler to do anything, it would be take this gift from a communist regime and expand it for the beauty and develop it in your backyard and be the balls in the Bitcoin mining space and this new Bitcoin standard. Okay. It's just so perfect. I don't know why people are overthinking of this. China can't be that stupid. Ken Charles, hi Ken. Yes, they can. Okay. Because when you're defending a stupid thing called communism, you can do stupid things all the time.
Well said. Here to America grabbing the bull, so to speak, grabbing the bull by the balls and being a safe space for Bitcoin. I couldn't agree more with you, Greg. You nailed it. The one thing I was thinking about with respect to China and why they did this, because I racked my brain, why would they make this dumb strategic move? I think it was, as we've seen the pieces on the chessboard come to light, the best explanation I can give is it really is about capital controls. And if you look at how Xi has been cracking down, by the way, one of the reasons we're talking about Evergrande at all right now, why now, right? Why not last year or 2 years ago? I mean, this thing has been turning into a train wreck for years now. And I think the answer to the right now question is, or why now question is, the government has been cracking down, right? Not only have they been cracking down on companies in other industries, whether it be gaming or whether it be the case of Didi, et cetera, et cetera. Alibaba, Jack Ma, that goes back, I don't know, almost a year now. The more they crack down and try to get a lid on the rampant credit expansion within the economy, the more funds are going to try to move around. They're going to try to move offshore. They're going to try to get out of the Chinese financial system.
Yep.
And Bitcoin has been the valve for capital flight, or it has been a valve for capital flight out of China for years. And it's hard to come up with a better one than something you can hand your fiat money to a miner in China. They take it, burn electricity, and they give you pristine, clean coins. Right? That's a pretty good trade if you're someone located in China and you want to get money out of the system. And so my sense, if I had to guess, is they made that hard strategic decision of, well, yeah, it's probably a bad move in the long run to not be a major player in mining, or at least not be dominant in Bitcoin mining, but we got bigger problems now. And, it's just a trade-off decision, basically saying, okay, we're going to cut off one of these capital flight valves, one of these mechanisms to get money out of the country, on the logic that while we're cracking down on these other sectors, we'll basically keep the thing standing, keep the house of cards going for a few years longer.
Well said. There's a comment that communism bashing is getting stale. The world is big enough for all your isms. Kobina, thank you for that. You're wrong. Okay? You're wrong. I'm sorry. Socializing losses does not work. That's what Wall Street has done in 1998 with long-term capital, in 2007, 8, and 9 with the great financial crisis. That's why we are where we are. You can't socialize the losses, okay? Creative destruction is the basis of capitalism. It's what works. And that's why. And I'm not picking on communism. I'm just telling you need to cleanse the forest. We talked about that, right? Andy, a forest fire cleanses the garbage that's fallen off the trees, and as well as the underbrush. If you don't let that forest fire happen, the final forest fire is cataclysmic. Okay, and I can't say it another way. Look, I love the United States and democracy, and nobody's perfect. But as Margaret Thatcher said, capitalism is the best form of government except for all those other ones. Or sorry, the worst form of government except for all those other ones, right? We are in a bad state right now, and people aren't fessing up to the actuality of this. We need to face the problems, not run from them. So I apologize to any communists out there. It's okay, but you're wrong.
And Greg, you're spot on about how the system has gotten out of control. And the reason we're all here, as we know, is Bitcoin is one of the few ways where we actually can make our voice heard. We can vote with our wallets rather than our ballots, which sort of disappear into the void in the current political system we've got. And that's why that's one of the reasons we Bitcoin.
There was my opportunity to be in Bretton Woods, which I was very flattered to be included in that in those meetings, and be on stage at one point. I was very concerned as a Canadian with the amount of talk that occurred on the first day about the inevitable war that's coming with China.
Yeah.
Okay. I don't want that, you guys. I don't want it, and I don't know anyone who does, but it almost seemed like it was a predetermined outcome. And this is not good, because there's that button that someday could get hit, and it will ensure mutually assured destruction for everyone. I honestly believe Bitcoin can solve some of that, and I'm not going to go into the war and all this. I'm just telling you the opportunity to control the world's most powerful computer system was given to us as Western countries by a government that is more socialist and communist than our current. And Traps is a gift. Enough talk about that. Then I apologize. Who I'm offending? Send me hate mail. That's all good. I get lots of hate mail. But at the end of the day, it's you got to fess up to the truth. Okay, this is what I'm talking about: is calling out the truth.
You can send it to at Foss Greg Foss. By the way, there's your handle on the screen.
And just to riff a little bit, this is all coming together, right? The regulation, the great power conflict, the cyber insecurity. Greg is 100% right that we can't. The problem with a total war or a major conflict today is that we live in the nuclear age, right? That wasn't the case, with World War II, which brought the end of the last long-term debt cycle, to use the Ray Dalio parlance. One of the nice things about Bitcoin is we live in this totally insecure internet, right? I was having a conversation with a friend who actually works in cybersecurity, and the way I frame it now when I talk to people about cybersecurity is, hey, I've got this great idea. It's called the internet. And what we're going to do is we're going to connect all the electronic devices in the world to an open, insecure communication platform. How do you think that's going to go? I'm imagining like I'm pitching this idea, 40 years ago. And the answer is, well, it doesn't go that great if you don't have security built into the system. And of course, I mean, I'll speak for myself. I did not understand internet insecurity until I started understanding Bitcoin. And I started understanding that, public key cryptography is crucial, number one. Number two, storing your data locally makes it much, much, much harder to be attacked because it's not all in one single honeypot. And so I do think that with time, Congress people, other people in power are going to realize that Bitcoin is the first real sizable instance of any internet native phenomenon that is truly secure because it's truly decentralized. And they will make a safe space for Bitcoin and similar projects that actually are decentralized and may give us a shot at re-architecting the internet with greater security. Now, of course, a lot of that is snake oil and XYZ, crappy crypto projects are gonna pitch their idea and try to raise money like they already have on that basis. But in the long run, it will, I think, be to the benefit both of Bitcoin and to the internet and to all of us citizens. And maybe by re-architecting the internet somewhat over time, we'll be better positioned to defend against attacks from great powers, whether it be China or anybody else. Now, I don't know if it'll happen fast enough. We'll see.
I mean, it's similar to what happened with the internet itself. And China just took this very aggressive stance against, the internet and controlling it and being very wary of it at first, and then ended up building its own internet and cutting itself off from the rest of the world. Bitcoin is very similar to the internet itself in many ways. I mean, it's a network layer that's built on top of the internet. So it doesn't surprise me to see that sort of reaction coming from China. And I don't think it's going to change that much. So yeah, I think you're right, Greg. Like, let's take advantage of that mistake. And the mining industry is taking off in the US, and
it gives me the opportunity to shout out your funding of that movie.
I was just going to do that. I'll let you do it.
Well, no, I was a proud contributor to that project as well. And I'm an engineer, guys. Everything breaks down for me very simply along the lines of conservation of energy, physics, math. It's for me, it's quite simple just to analyze different things. This Machine Greens was a great effort, and there's stuff in there that everybody can benefit from the knowledge that's imparted by the likes of Melton Demers and Lynn Alden and Nick Carter, and these were just people that these people are absolute. They're plowing fields for the rest of us. We're just lucky to have them. It was great. And the truth is, look, I'm involved in a power company that is doing the stuff that we're talking about. Energy And advances in energy are associated with every single advancement in human productivity and quality of life. And, there's certain movements in the ESG space that are sometimes negative, but Bitcoin can actually bridge those gaps. And Bitcoin mining is the proof of work is a thing of beauty. I often the difficulty adjustment in Bitcoin itself, I'm a little bit of a tangent, but the point is some of this stuff was so brilliant. You have to ask yourself that who designed this? Were they actually from another world? This is an advancement that is so leaps and so exponentially incredible. You wonder if this was imparted upon us by a third, an outer extraterrestrial. Now, I've already offended the communists, so now I'm going to offend the extraterrestrial people. Look, at the end of the day, I'm not trying to offend anybody. I'm trying to as a guy that spent 58 years old, spent 35 years in financial markets trading risk. This is the best asymmetric trade opportunity I've ever seen. And we can't get these knuckleheads to understand. Like, it's almost like I'm against it because it uses 0.1% of the global energy in the world. So I've got to be against it. You don't last long when you're that, closed-minded or pig-headed. You get carted off a trading floor, okay? When the information changes, change your position or get carted off the trading floor.
I'll just comment real quick on the development of Bitcoin. And it does seem like that it's yet another gradually then suddenly innovation or a thing that happens in Bitcoin. We refer to it all the time. It comes up all the time. And this is another case of it. The pieces of Bitcoin were built over 50 years plus. Cryptography obviously came around and really became an advanced mathematics discipline in and of itself when computers came around. Of course, it was being used way back in World War I as well. But cryptography was there. And then the idea of digital currency came around in the 80s, 90s. There were many projects that were tried. They were always failed because they were too centralized. Proof of work, Adam Back invented to reduce spam and to pay for emails, basically. And then Bram Cohen invented peer-to-peer networking with BitTorrent that was really robust peer-to-peer networking and not too centralized like Napster was to be taken down. And BitTorrent protocol is alive and well and will persist in a decentralized way well into the future. And then the big innovation of, Nakamoto put all those together, but the big innovation was that difficulty adjustment, which had never been applied or thought about in terms of proof of work. And that was absolutely essential and makes the whole thing come together. Of course, the game theory and everything was brilliant and put together too. So the way that all the pieces were put together was absolutely genius. And then that difficulty adjustment was another stroke of genius. So it's gradually...
A shout out to Adam Back at this point. Something that went under the radar for I didn't think got nearly as much coverage as it should have. When they raised, I think he raised $300 million at over $3 billion valuation or something like that. So great on him. But more importantly, some of that use of proceeds may go into the manufacturing of A6 chips in the West. And this is just all good. I don't, Bitcoiners, we are optimistic in the face of some tremendously pessimistic news. But we're optimistic for a reason. This isn't made up stuff, okay? This is based on math and code, very simple and very easy to get your head around. If you've even taken, your standard grade 11 or high school math, I mean, you should be able to understand this pretty simply.
Yeah, look at the setup. I mean, look at the facts and circumstances in the year 2021. You do have some movement on institutional investment. You have, this huge overhang risk of minor concentration in China gone. You have regulators in the West, especially the US, cracking down on things that are not Bitcoin, right? Things that are confusing potential investors, average people on the street, like, oh, I got to buy, a diversified portfolio of the 100 shitcoins. No, those are all illegal securities, but Bitcoin isn't. Yeah, the
Bitcoin
facts and
only for the win, by the way.
That's right. That's right. And then, yeah, you've got the mining industry absolutely blossoming, especially in places like Texas, and in a jurisdiction or jurisdictional system in which states actually do have significant rights to fight on behalf of positive commercial activity. Even if the federal government doesn't agree with how energy is being expended in that case.
Shameless shout out for my own power company. Canada's better than Texas because our ambient air temperature is substantially lower than Texas is. Okay, and it makes for Bitcoin mining much more efficient. We have lots of energy in Canada too. My company's in touch with 2 gigawatts. 2 gigawatts, guys. That's 2,000 megawatts. That's about 1/5 of the entire Bitcoin network right here in Canada.
Love it.
This is big. An entire province like the province of Saskatchewan could change if they embrace Bitcoin mining. I'm telling you, and it's happening. I'm not sure if you saw a company called Crew Energy, a publicly traded company called Crew Energy, is mining Bitcoin using their stranded natural gas. Like, come on, it doesn't get more simple than this.
Go to Canada. No liquid cooling required. Just open the window, right?
As an engineer, you don't always want to put your stuff in liquid if you don't have to. Okay, it's sort of simple. Okay, you might want to put your head in a liquid thing of beer, but you don't want to have to immerse your Bitcoin miners in liquid if you don't have to.
This is all. These are all good points. Making good cases. What's the name of your mining company?
It's called Validus. Well, it's an energy company. It's called Validus Power. It's a privately held company in Canada. I have some great partners. We actually have contracts with HUD 8, so publicly traded HUD 8. We have announced, I think, 100 megawatts with them. It's other things on the burner, but we got 2 gigs, and 2 gigs is a lot of power, you guys. Just to put it in context, you can run a small city on about 100 megs. Okay, so we got a lot of power in Canada, and rightly so. Canada has a lot of valuable natural resources. If Canada gets on the ball, and I know they won't do this, but imagine if we started pricing our energy in Bitcoin. Imagine if we had a prime minister who actually had a brain and said, we're going to use these natural resources to our benefit rather than crapping all over them all the time. Okay. Vlad Putin is thinking about this. Vlad Putin is thinking about pricing Russia's oil and natural gas in Bitcoin. I guarantee you. Okay. And once that happens, Bitcoin becomes the reserve asset of the world, not reserve currency, the reserve asset. Bitcoin is digital energy. You might as well sell your natural resource energy for digital energy. It only makes sense from the perspective of an engineer.
Well, maybe an even more impressive illustration of the amount of power that Greg's company has is that he could run Doc Brown's DeLorean, which only needs 1.21 gigs of power. So that's extremely impressive.
Good Lord, Marty. Good Lord, Marty. Do you know that?
What can you, imagine how much Bitcoin you can mine with some time travel. That's where, I don't know. If this hasn't come up at your board meeting yet, then I'll take credit for it. You can throw me some stock.
Hey, the bigger thing is when the world starts understanding that nuclear energy is the cleanest, most reliable energy source ever, safe. 100%. The education process is so hard and so high, and it's just another thing. You got these knuckleheads at the United Nations running around with half-baked ideas that are supported by failed. Certainly they didn't take math and science. They took anyway, I don't want hate mail from the people, those other people. I'm going to get enough hate mail. So just understand that this is an opportunity that I want North America to embrace because it makes sense.
Absolutely. We've already been getting into this. This is what I wanted to wrap up with, but maybe we can keep going a little bit, is this sort of new era for Bitcoin. We've reached this inflection point in this, early part of the second decade of Bitcoin's existence. Bitcoin's now an established global player on the monetary stage, on the geopolitical stage, being talked about, at the highest levels of the international banking regulation system, at the highest levels of the U.S. government and other nations. It's been bought by big corporations in the U.S., by a nation state now, made legal tender, etc. So it is here. It has arrived. It has emerged from being a curiosity for a group of internet nerds and speculators and whatever who are gambling and messing with this little toy in the 2010s. So here we are now, and it's really emerged into this new era, I think. And we've been talking about this and getting into it a little bit in the past 10 minutes, but I'd love to hear what you guys think about this next decade from a high level, how things play out. How are these chess pieces going to be moved around? How does Bitcoin overcome these headwinds, regulatory headwinds, and just how do you think things will play out with nation state adoption, with corporate adoption, since we're just getting into it now? How many, maybe give us a rough time frame on what it'll take for us to see a 10% of the Fortune 500 owning Bitcoin, or 10 nations owning Bitcoin. I'll leave it there just to kind of give you guys some places to jump off from, and I'll hand it over to Andy.
All right. Make all the predictions. Yeah. Let's
just play with it. I mean, it's gonna be a very fun decade.
Yeah. I predict that by the end of the decade, even communist aliens will own Bitcoin. Shout out to whoever just made the communist aliens comment in the stream there. Yeah. Okay. So a decade. So one of the things I wrote in my book was that within the decade, the debt problem would probably resolve itself. In other words, we're into this, 80-year debt cycle, and it's always amazing how long the powers that be can shift around the deck chairs before everyone really has to sit down in the game of musical chairs. But it seems unlikely to me that they're just going to be able to keep the game going through the 2020s, right? I think we're going to probably see some resolution here. I hope it's a peaceful resolution, speaking of our earlier conversation, but, I just don't know. And I personally think, by the way, that the most likely resolution is higher and sustained inflation, consumer price inflation, right? We've already seen crazy asset inflation. Okay, we all know about that. So, yeah, what does that mean for Bitcoin? Means Bitcoin much higher unless Bitcoin fails. And what would cause Bitcoin to fail? I don't know, some undiscovered bug, which is extremely low probability at this point, or government fiscal rectitude, right? If we start balancing budgets all of a sudden, that's going to be bad for Bitcoin. The probability of either of those things happening, I see as less than 1%. So, yeah, I am very bullish on Bitcoin. I think probably Bitcoin outstrips gold in terms of its value by the end of the decade. It could go even, much higher than that. I mean, we could have 7-figure US dollar price Bitcoin, within the decade. That's very possible. I think that it will be widespread. Your question about corporates, who knows? Who knows how long the corporates take? I'm curious Greg's view on that one. I mean, it's like, yes, Saylor set the playbook. So what are we waiting for? Are corporates waiting for more regulation? Are they just still balking at the price volatility, which probably isn't going anywhere anytime soon, right? Like Bitcoin ain't going to stop being volatile for a while. So I don't know. But those are a few thoughts, I guess, off the top of my head.
Yeah. Yeah. Great points, Andy. Okay. Let's hit that one on corporates. Before I go there, I think it's amazing that countries are leapfrogging corporations. Hats off to the guys down in El Salvador, and to my buddies at Ibex Mercado, who I met at Bitcoin Miami. They were the Guatemalans who live a 3-hour drive away from El Salvador, and now are are actually, they do the Chivo wallet for the merchant solution. Okay. So
they were so excited that day. I remember when the announcement happened at the end of Bitcoin 2021. Man.
Crazy.
They were literally running around, jumping and saying, we won.
Well, yeah, because, Jack Mahler's onboarded a country. Okay. You understand what that means. Like, this is just remarkable. So, there's an expression, slowly, then suddenly, and when you're a competitive CEO and you see that, investors are giving you a higher multiple valuation if you own something on your balance sheet that is viewed as a secure store of value rather than holding like $3 trillion, trillions is a lot, but billions of dollars worth of cash. The Apples of the world have to figure this out. And I know they figured it out. They just have to figure out how to wade into this market without having the market run away from them. And markets develop over time with a various players. And at the beginning, markets are dominated by the speculators, the new entrants, but the real staying power is when the big money gets in, the institutions, the pension funds, and the countries. Now, the funny thing is the countries have leapfrogged the hedgies and the companies so far, but this is what part of an efficient market developing over time. Again, we're 10 years old. You mentioned that, Grady. Like, this is crazy. It's 10 or 12 years old. Like, there's just so much that can happen. So what's going to happen over the next 10 years? Borrowing from my buddy Jeff Booth, 100 years worth of change. That's all I know, is 100 years worth of change is coming over the next 10 years. Okay. This is in everything. It's not just in the technology of money. It's in everything. Things will happen faster. Cycles are shorter. Okay. Crises happen more quickly. The great financial crisis was 3 years long. The COVID crisis was 3 months long, and both were equally disruptive to the world economy. Okay. You are never going to see a balanced budget again. It's impossible because the interest burden on the debt itself cannot even be paid down. So don't talk to me about balanced budgets. Not only does that stop a reelected party for the next 4 years. Like, you're never going to get reelected in 4 years if you come in on the platform that I'm going to be a steer and we're going to pay this down. You don't have a chance. All right. So balanced budgets, I won't say I'm 100% certain, but how about I'm 5 nines certain? 5 nines, 99.999% certain that the balance will not be, that the budgets will not be balanced. So here's this. I'm coming out with this. My price target on Bitcoin. I won't give you a 10-year price target. I'll just tell you in today's dollars, my price target on Bitcoin is over 2 million US per coin. Okay, in today's dollars. How do I get there? I talked about Bitcoin being priced energy being priced in Bitcoin. If and when that happens, which I think is a high likelihood, I think that Bitcoin will capture 5% of the total financial assets in the world. Okay. Total financial assets in the world today is US dollars 900 trillion. Okay. That includes real estate, bonds, currencies, equities, everything. 5% of 900 trillion is 45 trillion. Bring out your calculators. What's 45 trillion divided by 21 million? It's that simple, guys. That's over 2 million of Bitcoin. Now I back out what the market probabilities are telling me that that's going to happen. At today's price of 40 or 50,000 US, which is a rounding error, the market is telling me there's only a 2% chance that it gets to my price target. And I'm like, okay, your odds are wrong. My odds aren't 100% it's getting to my price target, but it's a lot higher than 2%. And by the way, that's assuming that it's also a 98% chance it's going to zero. Yeah, man, you don't get these chances in your life that often. It's like going to the racetrack and the trifecta. You know what the trifecta is, and the trifecta odds are like 100 to 1. And you're like, well, hold on. I know them. I know the 3 horses that are going to come in. So what do? You go to the window and you buy those odds. So I'm buying the odds of the Bitcoin market right now, as dictated by an open market of all sorts of different players, which includes traders, it includes guys that are able to short it. This is all part of an efficient market. I'll just tell you, I think your 2% probability of it hitting my price target is way, way low. So I'm a buyer and I play probabilities my whole life. It's what I've done. I'm not the smartest guy in the room, but I probably survived for 30 years because I wasn't the most stubborn person in the room either. When the information changes, I changed my position, and the first loss is your best loss. And I hate to bring this guy's name up, but I have to. Peter Schiff has fumbled the ball on the 1 yard line after running 99 yards down the field. He's got the ball and the fucking thing flies out of his hand because he's so stupid that he can't take it that last yard into the end zone. You got to change your risk and probability measures when the information changes. I will never talk about Peter Schiff on a podcast again, except to say he could have been the best performing gold fund manager in the history of mankind if he had just put 1% of his gold fund into Bitcoin when he knew it was aligned with his investment philosophy of fiat. He nailed it. He's been calling fiat a Ponzi for 30 years. So he's been right. It's just that his playbook was wrong. And that's a shame. But, you know, that's what happens when you're either conflicted or pig-headed or both. Change your position when the information changes. Apple will change their position. Ray Dalio will change his position. And the countries of Central America will change their position. And I really hope that Canada changes Canada's position. Because, by the way, Canada is in bad shape. On the total debt to GDP metrics, Canada is in really bad shape. And we just voted in a prime minister who doesn't understand mathematics and is quoted as saying, "Forgive me if I don't care about monetary policy." God, good Lord, if he was the CEO of a company, he'd be fired on the spot.
I had not heard that. That's absolutely terrible and appalling. Well, gentlemen, thank you so much. Greg, that was a fantastic summary there at the end about why to be bullish and the odds and the running of the numbers. You know, it's always great to hear it summarized again. You know, you've got it in your head, but when you hear another Bitcoiner, you know, in the 10 different ways or 100 different ways describe the investment case, and it's always great to hear. That one was a special one for me, so I appreciate that, man. Andy, always appreciate you. You always come, you know, prepared, very thoughtful. You know, you always drop, you know, knowledge on us that is always very much appreciated. Of course, you'll be back many, many times. I like this pairing. I like, you know, obviously you and Preston do a regular show together, but I think you and Greg should come back on a regular basis too, because that was fun.
Greg brings the fire.
Which just means more Andy all the time.
Greg brings the fire. I love it.
I'd be happy to come back anytime. And Andy, I agree. You know what? One of the things that having worked on both the buy side and the sell side of the street in Canada and the USA, the most important thing is when you get healthy discussion amongst your partners that enlighten you to new ways of thinking about things. And that's all I'm trying to do. I'm not one to apologize all the time, but I will apologize to anybody I offended on this podcast. Not trying to do that, just trying to bring the truth. Okay. I have 3 kids. I care about those kids and the future of those kids. And we are not doing a good job of pulling forward, you know, we're pulling forward future gains at their expense. And that's just not right. Okay. That's not what these countries, our respective countries, were brought up on. And I just got to call out this stuff. It's concerning to a 58-year-old fat guy like me.
You can tell how passionate Greg is about Bitcoin because it takes a lot for a Canadian to come close to offending anyone. So the passion is there. All right. Thanks so much, gentlemen. I'm going to wrap this thing up. Let you guys move on about your lives. Greg can go to his 4th podcast. Thanks again, guys. Appreciate it.
Thank you so much, guys. Great talking to you.
Thanks, Greg.
See ya.
All right. Another great one in the books, episode 66 of Swan Signal Live. We've got 65 others in the archive on the YouTube channel. Go to swansignalpodcast.com to download the whole archive. Go back. There's some gems in there and amazing pairings. That's why I love doing the show, is bringing together two great Bitcoiners, letting those mind melds happen and come up with something new than the one-on-one podcast that you've listened to many times with them. So I love the format of this show for that reason. Go to swanbitcoin.com, set up your Swan account. It literally takes like 2 minutes at the fastest, 5 minutes, sort of at the max. I think it's, averaging somewhere 3.5 minutes to set up an account and get approved and being able to start stacking. It's incredible. That's like 80% of our clients are onboarding in less than 5 minutes. So you can go to swanbitcoin.com. I think it's the best, the easiest onboarding experience. I watched my mom do it. I've watched my aunts and uncles do it. I've watched my grandfather do it. And he's 94 years old. So he has onboarded to Swan in 5 minutes. It was great. And he's got some Bitcoin now that he will be handing down to his grandchildren and his great-great-grandchildren, probably his great-great-grandchildren. I don't think he's going to give me any Bitcoin. But it's easy. It's fast. And you can bring your friends and family on board just as easily. Literally watch them, hold their phone. They need an ID. And they need to take a picture of themselves, for those KYC AML laws that we don't like but have to abide by. If you're going to do that, go to swanbitcoin.com/enlist, ENLIST, and you can join the Swan Force, which is our referral program, our referral team. And we've got 5,000 people. I think it's up to 6,000 people now actually on the Swan Force. You get 25% of all of the fees that your referrals generates with their Bitcoin buys for a year. And people are stacking mad sats. It's amazing. We have people commenting all the time on how thrilled they are on the money that they're just seeing come into their Swan account. It gets posted in automatically. You go in, once a month and check on your auto stacking plan, and you'll see some sats that you didn't even know were coming in from all of your referrals purchases. It's awesome. It's a great experience. So check out Swan Force, swanbitcoin.com/enlist, and delight your friends and family with a 5-minute onboarding experience. Get them stacking and, give them the URL of this podcast and our blog. And we have ebooks and we have all kinds of education that's around. We have a lot more coming that I'm really excited to announce soon. So thanks again for joining us today. We'll see you in a couple of weeks for another episode of Swan Signal Live. Take care.